Hello, everyone, and thank you for joining us again. We have Miss Erin May with FEMA or NFIP. You're muted.
You're muted, Erin.
Erin, you're still on mute. Okay.
Sorry about that.
So we have Erin with FEMA or NFIP, and then also Diana, who will be stepping in, from my understanding, from time to time. So
Yes.
Erin, thank you very much for being here. We're excited to learn about insurance, flood insurance. I've heard big.
Yeah, so since we have so few people on the line, I would kind of like to get a sense from the folks, if you guys can all figure out the chat, what your background is. Like, just, you know, are you in real estate? Are you an insurance agent? Are you a homeowner? Are you a public official? You know, something like that. If you could just, and if you just want to send it to me rather than to everyone, that's fine, or me and Diana, or to the panelists, I think is an option, right, Samantha?
Yes, yes, it is.
No, it just, you have to pick people. So why don't you pick me? All right, somebody's got to jump in there. Chat's down at the bottom. If you roll your arrow across the bottom, you'll see chat. There we go. Hannah's a reporter. Okay, great. Elizabeth's a community member. Okay, great. Oh, okay, so we have some insurance agents on the line. That's good. All right. Okay, well, that gives me an idea. We kind of have an interesting overview. I thought maybe we had some real estate folks as well. So I don't know why. That was just my gut feeling. So, all right, with that, let me share my screen here and convert this to share to full screen. Can you guys see it full screen yet? There we go. Okay, great. And it doesn't look like I can see the chat, Diana, so if you could keep an eye on that. So let me go back to the beginning here. I thought we were all at the beginning. So welcome, good evening. We've got some interesting changes coming within the NFIP that Diana is going to discuss in the second half. Diana is our FEMA flood insurance liaison for FEMA's Region 8. We cover, both of us cover 6 states. And I support her as my title isn't the same, but kind of as a flood insurance liaison as well. So we are here in the region to answer insurance questions, you know, anything related to that, realtors, lenders, you know, we can help you out. So our numbers will be up at the end, as well as Samantha's and Tracy Sears, who can also help you from the state. So with that, let's go to the agenda. I just want to talk about what we're going to do. We're going to do a little overview on some fun, or I don't know if you want to call it that, but some interesting facts on flood, and then go over some kind of cool information about Miles City. You guys, you get the double thumbs up, and we'll talk about that a little bit more later. And then we're going to go over just kind of a review of what the NFIP policy covers, lender requirements, coverage amounts, stuff like that. There'll be a little bit more in there. And then we've got a great slide in there about how to prepare for floods. And then the last piece, Diana is going to take over, and we're going to talk about, and this is probably the biggest news, how the rates are going to be changing come October of this year. And they're pretty significant. And I think in Miles City's case, it's going to work to the benefit of a lot of your current policyholders. So, and maybe homeowners who want to come back into the fold, which would be great. So with that, let's go to the next slide, and I'll start, hang on here, going on to the, oh, can I just do the arrow? Hang on. I keep trying to use the little invisible arrows at the bottom, but they don't work. Okay, so these are just, I know it's a lot of info on the page, so you know, feel free to read through them as I'm talking, but I think the most important bullet that's on there, even in a low risk year, like the National Weather Service was saying, you're still 4 times more likely to, over the lifetime of a 30-year mortgage, to have a claim for flood, than you are for fire. It is the natural, or it is the #1 natural disaster worldwide for loss of life and property. And that's part of the reason that this, this program came into being. And so I really like to mention that. And you'll see the graphic on the left that just says 1 inch of water in your home can cause $25,000 worth of damage. Obviously that depends on if it's an unfinished basement or if it's a living floor of the house. So another fact that we like to let people know about that a lot of times they don't know about is a lot of people assume homeowners and renters insurance automatically covers flood insurance, and most flood insurance doesn't. There is one exception to that, and that is mobile home homeowners insurance. It can include flood. So if you're talking to a client, if you're talking, you know, if you're looking at your own property and it happens to be a mobile home, you want to double check that by speaking with your agent, because some of them do. But you know, a standard stick home or commercial building, the policy will not cover flood, and so that's why you need a separate flood policy. What's really interesting is that we're seeing an increase in claims in our low to moderate risk flood zones across the nation. So, you know, 10 years ago, we used to say, you know, 20% of our claims annually were in low to moderate risk flood zones. And now that percentage is more like 25 to 30%. Here in Colorado, when we flooded in 2013, that percentage was more like 35%. And some of our events, you know, we got past that. And this is why I was kind of asking some questions of the National Weather Service, is that we flooded in a time of year that I would not consider, at least northern Colorado, to be a big risk, which was late September. Past when all the snow melt was a huge issue. And we got bombarded. We got 36 inches of rain in 3 days. And, you know, some parts of the state got a 25-year flood and had water in their basement. Some of them had a 100-year flood. And some parts of the state, it was literally an 1,000-year flood event. It was humongo. So, you know, it's hard to predict, and Mother Nature puts her water wherever the heck she feels like it, when she feels like it. So, you know, all of our predictions, I think are, you know, informed models, and, but it's still, you know, and by the way, why is Mother Nature a she? Why can't it be, you know, it always seems like it's the female role, but anyway, Mother Nature really chooses when it's time. So all of our best predictions sometimes don't work. So the other thing that's really important to know about flood insurance, that a lot of people who say, well, I'm not going to get flood insurance because I'll just get, I'll just wait for a FEMA to come in and give me money. Well, number one, the event might not be big enough to qualify for a presidential declaration. But if you have flood insurance and you are flooded and you meet the definition of a flood, which we'll talk about later in our policy, there doesn't have to be a presidential declaration in order to get payment from our flood policies. And it's been proven that communities that have a good policy count for flood insurance, be it from us or through the private industry, have a better chance of recovering. So you have less blight in your community, and it's much easier for people to get back on their feet economically. So all of those things are a big factor. And the other thing to know about disaster assistance is that most of the time it's a loan. It can be just a grant. But if you get a grant, in a lot of cases, you're going to be required to carry flood insurance from there on out, and that follows the home and not the owner. And so, but in many cases, it's an SBA loan, and for that SBA loan, a lot of times they'll require flood insurance as well. So, and our average grant right now, as you can see on there, is $5,000. I've seen more, I've seen less, and here in Colorado, I know the statistics because we did a lot of outreach after 2013's flooding event. Before 2013, individuals had not gotten disaster assistance from FEMA since the early 1980s. So that's a long time to go between, you know, and running that risk and assuming that FEMA is just going to come in and help you and you don't need flood insurance. So, and then this is kind of an interesting fact too. The national average for flood claims in 2019 was 52,000. That number's gone up. Diana, how much would you say in the last couple of years?
Oh, at least 30–40%.
Yeah. Yeah, and some of that is, you know, is the climate change issues that we're having, and that change in our climate. And so, you know, it's a challenge for all of us, and it's important because, you know, your home for most people is your #1 investment. And so you really want to protect that. You don't want to rely on the state. You don't want to rely on the local government or the national, you know, the federal government to come in and save you when it's your biggest investment. So that's why we work so hard to get out these messages, even in these times when we're all trapped in these little boxes we call Zoom meetings. I really like this last statistic, Diana, and it came off of the FEMA recent FEMA website updates, which you know, a lot of people, and I know you'll hear this in Montana. I know that our state floodplain coordinator says this a lot, is that they always say, well, it doesn't flood in Montana, and you know, we need stories about what happens in the Rocky Mountains, and you know, 99% of our counties across the US have been affected by flooding between 1996 and 2019. So that gives you an idea. You know, a lot of people think it's a coastal problem, or it's a problem if you live on a river. Not necessarily. And so these are important things to keep in mind when you're making decisions about flood insurance. So here's the good news. This is why you got the double thumbs up, is that there are, I did some policy digging on you guys, and generally speaking, our percentage of coverage nationally within a community is between 10 and 15%. And you guys, if you look at the numbers there, you have 4,000 properties within Miles City. Now, that 890 number, Samantha, just so you know, that's for Custer County. I couldn't drill down to just the city limits of Miles City. So within Custer County, and I don't know how many properties that raises the total properties within Miles City, and that's total properties, not, you know, properties that are in the high-risk flood zone. You guys are doing much better than the national average. So we really want to thank you for being concerned, and obviously we'd like to see those numbers pop up. As you can see here, the bulk of your policies are in our preferred risk policy, which means you're in a low to moderate risk flood zone. So again, that's awesome. We're glad that you're recognizing the risk even when you're a low to moderate risk flood zone. And then 246 policies within Miles City are in that high risk flood zone. So great job, applause, thank you very much. And we really appreciate your protecting your property and making your community more resilient. So let's go on to talking about flood insurance and how it can be pretty affordable. I couldn't pull an average premium for your community, unfortunately. So we've got a new database, so I can't run some of those numbers. But it can cost as little as $325 a year. Obviously, that is going to depend on two things. One, it can mean that you're in a preferred risk policy. It can also mean that you've built a home that's elevated above where we estimate the floodwaters are going to rise to. And you've gotten an elevation certificate, and because you sit so much above where we estimate the water will rise to in a large flood event, that your rates reflect that. And so if that's the case, again, and if anybody you know is considering building in a high-risk flood zone, you really want to have them talking not just to their local floodplain administrator, but also getting quotes from insurance agents before they build, before they break ground, so they get a sense of what that premium is going to be on the back end, because they're going to own the home most likely a long time. You can purchase with a credit card. There is a 30-day waiting period. So if, you know, let's say next year you all are considering whether you want to buy flood insurance or not. You don't want to wait until, you know, another state is flooding and or Canada's flooding and you know it's coming your way. We really, on here it says we have a 30-day waiting period before your policy kicks in and you have coverage, but we really recommend you at least get coverage 60 to 45 days before that 30-day waiting period, because it takes some time to process a new application. So, you know, it's important that you keep that in mind, and almost inevitably, both Diana and I get panicked calls from people when the water's heading their way. And we'll talk about why that's a challenge later. So you can contact any insurance agent. You don't have to contact Diana and I. We don't write flood insurance. We can contact underwriting if you're having issues or your agent has questions. But we're not agents. We're outreach people. So any agent can write it. They might choose not to. If that's the case, then call another agent, and we can always try and help you find one as well. Floodsmart.gov has some great information. That's the toll-free number to get a hold of them. And then the last link on there is our preparedness website. Like, how do you get prepared for flood? What do you need to do? And we're going to talk about that. I think a little bit later. We're not far enough down. So, oops. So let's go into, oh, I forgot to turn off my ringer, hang on. Let's go to the next slide here. And let's talk a little bit about mandatory purchase requirements. And, you know, has anybody ever gotten a letter from their lender telling them that they needed to buy flood insurance because they're in a high-risk flood zone? If so, the reason for that is federally backed loans in which the property is in a high-risk flood zone. Flood insurance is a requirement by the lender. And if you ignore the letter or wait to the last minute, Diana and I helped a couple last week rushing to get this done in time, get their coverage in place before the 45 days was up. You have 45 days from the date that letter is on the date on the letter to get flood insurance in place. So, you know, don't ignore your mail, I guess is the bottom line, which tends to happen to people. I know if you get a bunch of mail or you've been out of town, it gets buried sometimes. The lender will escrow payment so that, you know, you don't have to pay it all in one lump sum. Some people like to pay it in a lump sum if they don't have a federally backed loan. That's an option. And the main thing to know about it is that when is the lender going to let you know that you're in a high risk flood zone? There's a new map coming, say, for your community, they are not required to check that map has been, you know, updated recently, unless one of the four things on that fourth bullet down says, unless you're making a new loan, you're increasing the amount of your loan, they're renewing a loan, or they're extending a loan. So those are the four times when they are required to take a look at whether the property is in a high-risk flood zone or not. So in this case that I was telling you about, Diana and I helped last week, they had been in a high-risk flood zone since 2005, and the lender didn't catch it. And they didn't have one of these four events, but the lender finally decided to take a look at the maps and found, oh my goodness, these people have been in a high-risk flood zone since 2005 and required flood insurance. So most big lenders will do an annual review, but they're not required to. So the final piece that I think is kind of important for people to know about is that there's three ways that the lender can require coverage. And one is the maximum amount through the National Flood Insurance Program, which I think is up on the next slide, which we'll talk about next. Replacement cost value. That means how much does it cost to replace or rebuild the property or the elements lost within it, or the amount left on the loan. And I do see smaller banks allowing the amount left on the loan. That does happen sometimes, especially when you're very close to the end of your loan. Like say you've only got 15, 20,000 left on it, they might allow that. So with that, let's go to the next slide and talk about coverages and deductible amounts. So for residential structures, the amount available, the maximum amount available through the NFIP is $250,000. And then we've also upped in the last, what was that, 5 years maybe, the amount of deductible. It used to be we had a maximum deductible of $5,000. We've now allowed people to go to $10,000 on the residential properties. And if you do want to go with a higher deductible, say to save costs, you do need to talk to your lender and make sure they're okay with that before you make these changes. And then for commercial structures or other residential structures that might be, I don't know, you know, in New York City that might cover co-ops or nursing homes or apartment buildings, something like that. Those would be covered up to $500,000 through the National Flood Insurance Program with a deductible of up to $50,000 maximum amount that you can have as a deductible. And I don't know what the home prices are in Miles City. A lot of times that isn't, you know, $250,000 really isn't sufficient. Some people look at flood insurance on the top of their residential policy to cover the difference of their home value. But that is a lot of times people go to the private market just because that's not that we don't cover enough of the value of the home, especially when you're talking about $500,000 or $1 million homes. So, and that's totally allowable as long as your lender allows it. So let's go to the next slide here and talk about some of the coverage things that are good to know about. And I don't know how much this comes into play, but if you have residential condo buildings in Miles City or within the county, we do have a policy that will cover the value of the building times, so it'll be 250,000 times the number of units within the building. And then also commercial buildings can offer coverage. If it's a commercial condo owned building, our coverage is pretty darn limited. So it makes it pretty challenging. And we only cover contents for commercial condo buildings. So that's private market is better for them, but we cover, you know, up to 500,000, all those other types of commercial structures. That could be a silo, it could be a barn, you know, it could be a shed potentially, a detached garage. If you have an attached and a detached garage, you could insure that one separately if that has a lot of value to it. You can buy building and contents coverage. And then again, I mentioned that there's separate policies for other structures. So if you have a residential structure with a lot of different buildings on it, that's usually tends to be a rural or agricultural property. You can get insurance for those other structures as well. And the one thing that we do like to point out is we have limited basement coverage. So what does that mean? Well, the biggest thing to know, and by the way, most homeowner policies do not cover this. Our policy protects the foundation. But it does not cover a finished basement. So, but we'll protect, you know, the air conditioner, the HVAC system, the water heater that might be down there. But if you have a finished basement, we're going to return it to an unfinished basement status. So that means we're going to help you muck it out. If you need to replace the drywall, that kind of thing, will help you with those things. And then mold is kind of a tricky thing. You have to mitigate it. You can't just let it go unless for some reason you can't get in there for extended period of time, like you know, you're so flooded, we don't get in there for 90 days. And that does happen up in North Dakota. That happened a number of times up there, where it took so long for the water to you know, flow downstream. It was 9 months till people could get into their home. That's a different scenario. But if you choose not to get in and deal and remediate with the mold right away, then you're going to have a harder time justifying those damages. So it's important to mitigate that. It's also important to follow the guidelines in terms of masks when you go in, especially if you have lung issues. So if you're older, if you have COPD, if you have bad asthma, you really need to make sure you're following all the guidelines. Well, everybody needs to follow the guideline, but in those cases, I've had people that I've helped with claims that have ended up hospitalized because they didn't. So it's important. And then the last kind of interesting piece that a lot of people probably don't know is that we have an additional $30,000 available built into our policy in order to bring your home into compliance. So let's say the home was substantially damaged. Substantially damaged means more than 50% of the home was damaged. Well, then they would qualify for that $30,000. And that $30,000 can be used to elevate the home. It can be used to move the home. It can be used to buy land potentially. Obviously, $30,000 doesn't necessarily go a long way, but that $30,000 can be used in conjunction with grant monies that the city or county might be going after after a large flood event. And we have definitely seen homes be elevated for that $30,000. You know, depending on the type of construction for that building. Let's go on to the next slide. That gives you some ideas of coverages. The other thing that we like to mention is that we do have a loss avoidance element built into our policy. So we'll pay up to $1,000 for things to protect your property in the advent of an upcoming flood. It has to be imminent. So you can't build a dike and leave it up year round, which we've had issues with in some states. And the reason for that is that dike can hold the water in a rain event. So, you know, it kind of turns the backyard into a pool. You know, so that would cover sandbagging, protecting your windows. I'm trying to think what other elements am I missing, Diana, that we pay for. We now cover these big bags that you can fill up with water, believe it or not. But we'll only pay for those one time on your policy.
Temporary levies.
Temporary levies, right.
Yeah,
temporary
move 'em.
is the keyword.
Yeah.
Yep.
Yeah.
Yep. And then the fill, water pumps, but not to buy one or to rent one. And the labor is minimum wage for your immediate family. So you're not going to get labor covered for neighbors who come in to help out. So, but that's important for people to know. If you have policyholders or citizens who've had multiple claims in the past, I actually tell people not to turn these kind of claims, small claims in, because they could be considered a repetitive loss property, and you know, it's not ideal. It changes the rates, puts you in a different rating category. So if you don't have to, you know, if you can self-fund that $1,000 and do, if you can't, you can't, go ahead and use it. But at any rate, let's move forward here. So let's talk about what is a flood. Well, and you guys can read through this, but the important things to know are it's a temporary and general condition of flooding, and it's a partial or complete inundation of 2 or more acres. Those acres do need to be continuous, or 2 or more properties. So what's, in most cases, if you're in a city or, you know, suburban area, it's that 2 or more properties that meets the definition. And what does that 2 properties mean? So it can be just the street and your house. I had a case where the storm drains backed up, and just one person in the neighborhood was affected, and that water traveled over the street and into their yard and affected nobody else in the neighborhood, and they met the definition of a flood. And the main thing to know is it's surface water, not seepage, which is what, you know, comes up through the drains. So surface water is very important. It also covers mud flow, which I like to say looks like, you know, chocolate milk with maybe some debris in it. We do not cover mud slides, which kind of looks like crumbling cake coming down a hillside. So, and then there are, that last bullet says we do cover collapse or subsidence of land. Oh, it says my battery's running low here. Hang on, I better double check here. Why don't you keep going? I'm gonna figure out, because I'm plugged in, why it's not going. Why don't you go for a second, Diana? I'm going to go off the video here and figure out what's going on.
So on that other thing, another key to that is from any source. So it's not just from a river or creek or lake or something. It can also be a a ruptured water main. It can be a car hits a fire hydrant and causes, that gushing water that comes up. It can be, a sudden downpour. What do they call those? Cloud bombs or something like that, where it just whooshes the water in. That's what we're seeing more and more of our flooding in. But on the first day of coverage on a brand new policy, if the floodwaters are in progress, then that policy will not go into effect. It will only be in effect if there is a flood after that first day of coverage.
Okay, I think I got it figured out. I think it was just a loose cord. Those are all good things to cover. Thanks, Diana. Oh, but why can I not advance the slide now? It says you are screen sharing. Oh, come on. Let me pause and then resume share. Let's try this again. Okay, there we go. All right, so now let's get into, what you need to do to prepare before a flood. And I know that you guys covered some of this yesterday, so I'm not going to spend a lot of time on this, but we both thought this was a really great layout of things to do before, during, and after a flood. And probably the most important thing to do before a flood is to take photos and catalog what you've got in your house. It's the hardest thing to do, and you leave dollars on the table when you're going through a claim process if you don't do this in advance. So take pictures of the room, take pictures of your expensive things, get serial numbers on your refrigerator and all your big appliances. Those kinds of things are very, very helpful to the claims adjuster, and gives them an idea of what was in that room before the flood event happened. And it's I know it's challenging and we all lead busy lives, but there are actually there's software out there that you can download from some of the Insurance Association websites. And I'm sure your insurance companies have it as well, where you can do this in advance, and it's just like its own spreadsheet, and it goes room by room, and it's very logical. So it's a good thing to do. Always, the emergency plan is really critical. Where are you going to meet up with your family? Where's your central meeting point? And the other thing that people don't think about, because we all have our numbers in our cell phones, is you need to print out those contact lists, because you might not have power for a few days. And so being able to contact your family when you're, maybe working at the library and your phone's dead, you don't have your contact information. Well, if you're not on Facebook, it makes it really hard to get a hold of people. Go ahead and read through this. We'll be happy to bring this back up at the end if everybody didn't get through it, but I want to get to the real pièce de resistance, which is what's coming with the new changes in rating. And it's actually, I think, going to be pretty beneficial to you guys. So I think the next slide is you, Diana. Let's go and see what it is. Yep, here we go. So this is the last slide. So this I pulled off of the FEMA website.
No, we have a couple of slides on this.
What?
We have a couple of slides on this.
Yeah, okay. So what's really the best news is about 38% of people across the state will see a reduction in premium. That's really great. 58% will see no increase or less than $10 increase with these changes. And only 2 to 3% will see an increase in premium. And then on top of this, your community participates in something called the community rating system. And what that is our community rating system comes in and takes a look at everything Samantha and her department does to both inform you and reduce the risk, mitigate the risk of flooding within your city and your outlying areas. And for people who are in a special flood hazard area, that's what that SFHA stands for. That means a high-risk flood zone. You get a 10% discount on top of your premium. And everybody who's in a low to moderate risk flood zone, you get a 5% discount. And so, you know, thank you to Miles City for being a member of CRS. It's a lot of work, and we really appreciate you doing that. And those discounts can actually become better as they reach a new level. They're at level 8 right now. I know Samantha's hoping to get to a level 7, and hopefully we can make that happen. So you know, I think this is good news. It's you know, every state's a little bit different. So with that, let's go to the next slide. And I'm going to turn it over to Diana to talk to you about the rating methodology.
So, and Rebecca says in the chat room, fabulous. How did this come about? Well, it came about because we have not changed the way we rate policies in over 40 years, in almost 50 years. So a lot of things, just like computers, just like your iPhones and things like that, technology changes just about every year. So one of the things that we were confronted with was we found that we were not being equitable in some of our rating methodology. So we are completely changing what we and how we rate flood insurance. So all policies are going to be rated on the distance, on a number of variables. One is, what's the distance from the water source? So if there's a creek in your backyard, or you've got the rivers there in Miles City, what's that distance between that flooding source and your property? The further away, the lower the premium is going to be. Now, with that being said, we're not rating on flood zones anymore, although flood zones are still going to be used, and the flood maps are still going to be used for floodplain management requirements, which is what SAM does, and for mandatory purchase. So that is still going to be, that basis is those flood maps, but the rates are not going to be rated on the flood zones anymore. And we're going to be able to rate each structure individually. Right now, you're in a special flood hazard area. Everything within that flood zone gets treated the same way. Well, that's not what's going to happen in the future. Now we're going to look at each individual structure. So we are using a number of databases, a number of catastrophe models. We're working with Corps of Engineers for levy methodology. We're working with USGS for a lot of stuff that they do. And all of that is going into a rating engine. We're going to be determining first floor height and comparing that to the lowest floor. We're going to have only 6 types of foundation: the basement, slab on grade, pure post pilings, those type. We're going to have 6 instead of 9 that we've had in the past. And then property owners will be eligible for mitigation actions that they take. If it's built on a crawl space, they don't have vents in there now, flood vents in that crawl space, and they put those in, they'll get a discount for that. One of the things that this is actually doing is we are no longer going to be rating preferred risk. It'll be risk-based, not based on flood zone. And our grandfather rule is going away. So one good thing about that is the CRS discount that a community has right now. We only give 10% in Miles City. We only give 10% for those structures in special flood hazard areas. But with the new rating system, the properties are now going, that used to be preferred risk, are now going to be able to get that 10% rating. So that non-special flood hazard area goes away, because we didn't do that on preferred risk, and we didn't do that on newly mapped. If you're newly mapped into a special flood hazard area, you're going to get a discount. Now, Does that mean once we start new business as of October 1st and renewals as of April 1st of 2022, we're going to go immediately to that risk? No. Federal law requires us to limit our increases to 15% for a class of business or 18% for individuals. So what we're going to do is, as those policies renew, we're going to be increasing those about, up to 18% on a glide path to the point of a true risk analysis. So there are, so we're also including other, right now we do coastal, we do riverine, okay? So now we're going to be doing coastal, riverine, storm surge, heavy rainfall, coastal erosion, and we don't have that in our area, with the exception on the Great Salt Lake in Utah, but it gives us the ability to truly see what that risk is for that individual property. So as Aaron said, some are going to see a reduction in policy. Some may only see up to $10 a month increase, but there is going to be some properties that are going to see a higher risk, but they're going to be moving into the same glide path, the same 18% on an annual basis. The other thing I want to tell you is that, and it just went right out of my head. I'll think of it. Erin, you want to go on to the next slide?
Yep. And just FYI, Diana, I can't see the chat, so I sent an email to Samantha, but if you can keep an eye on the chat and see if there's any questions.
Okay.
Oh, it's not letting me advance. Try it on your end, see if it works for you.
I don't think I have the ability.
All right, let me pause share and reshare, because that fixed it last time. Just a second. A little glitchy, sorry folks. Okay, now let's try it. There we go.
Okay. So as I said, some of the discounts that we are doing, those that are pre-firm, those that were built before the community joined the NFIP and passed regulations or ordinances to regulate development in their high-risk areas. As I said, preferred risk, grandfather, those are going away. Oh, that's that bullet. So we also found in our analysis that lower valued structures were subsidizing higher valued structures, and that's unfair. And let's think about it. You've got a $200,000 house and you've got a $2 million house. The damage is going to be more on that $2 million house just because of size. So we're changing that equity. So we're bringing replacement cost into the factors of how we rate a flood policy. So the lower valued homes it's going to be more equitable for them to have policies. The premium's going to be lower, and the higher valued homes, you get an enter to a water in a $2 million home, you're gonna hit the $250,000 limit real quick. So we're trying to bring that back into a more level playing field. One of the good things about it is we can still transfer policies. If I sell a policy to you and I have these mitigation actions on that policy, I can transfer that policy to you, and you can carry on with those discounts when selling that property. So the question is, what do you think will happen to the preferred risk and newly mapped policies? Well, they're probably going to see an increase in premium, but again, we can't increase more than 18%. So if your premium is $500, we can't increase more than $90 at each renewal. So we're not going to jump from the preferred risk to the true risk rate. They're going to be on a glide path on an annual basis.
And keep in mind, that's also what's gonna matter is the distance from the water source. So if you have a preferred risk policy that's 3 miles from the water source, and you have a preferred risk policy that's a half a block away,
The rating's going to be different.
those rates are gonna be different.
Yeah.
So, and we don't know them yet.
Right. So as I said, we're starting the rollout, new business, October 1. Now, one other good thing about this is we have decided that at a renewal between October and April, if we find that there is a reduction in premium, then we are going to give that reduction in premium to that policy. So they don't have to wait until after the April 1 renewal start date in order to get that reduction in premium. So there is more information that you can read about on our website. Erin has put the two links into this presentation. If you just do FEMA Risk Rating 2.0, it'll bring you up to it. You can also get to it through floodsmart.gov to talk about Nfip Transformation. And the rating is just the beginning of our transformation. We are changing our policies. So our dwelling policy, our general property policy, our residential condominium building association policy. We're bringing that up to more industry standard. Are we going to add coverage to that? Probably not at this time, but it is in the talking space. One of the things I heard on a call we had, what's today? Tuesday, last week, I guess, is we are looking to increase the increased cost of compliance coverage from 30,000 up. We don't know what that's going to be or when that takes effect. That's been 30,000, I guess, for 15 years. So, you know, as building, as mitigation actions increase in cost, we need to keep up with that. So that's one thing that's coming good on that, is we're looking at how today's market compares to what it did 10 or 15 years ago. So, you know, there's more information on there. You know, Erin and I and my branch chief will probably be doing some training over the next couple of months. If I know we have an insurance agent on here or two, that there is our training contractor is going to start training insurance agents on the new rating methodology. One of the other things that we're doing is we are building a rating engine. So we're not going to be issuing rate tables in our flood insurance manual anymore. The agent is going to key the application in. There are 6 questions that have to be answered. Few additionals underneath each of those. You know, what type of foundation is it? How many floors? Where are the contents located? And you'll key into your write your own carrier. The carrier will then upload it into FEMA's rating engine. FEMA's actually going to send the quote back to the company that'll go back to the agent. So right now I won't have access to it until probably sometime late next year to be able to, you know, check and see how mitigation actions are going to affect the cost of flood insurance. So right now, everything's going to have to go through the insurance agent. So when you see training opportunities from our training contractor, and they're supposed to start the first week in June, from what I understand, please take those courses, learn more detail about how we are going to rate, how you're going to process applications, how you're going to process changes. And in fact, take it more than once, because this is going to be so much information to absorb. It's going to take a couple of times. I've listened to it 3 times. I get something more every time I listen to it.
Me too. I've listened to it numerous times.
That's coming in. Do what?
I said I've done the same thing.
Yeah.
Listened to it multiple times just to make sure I'm understanding all the elements of this, because it is a big change.
So the other thing is every state has a profile, and in that profile, it will give you the percentages like we have just quoted, you know, what percentage of policies are going to be decreased, what percentage of policies are going to be increased $10 a month, and then there's going to be a small portion. And if I remember right, Erin, I think it was less than 10%. It was like 3 to 4% are going to see a rather increase, and you're going to see those in
2 to 3%. Yeah, it's pretty small.
Yeah, in your higher valued homes.
And I may be mistaken. I can go back in and look, but I think those numbers, that was for Custer County. I don't think that was just Montana. I think I created the title and then realized
no, it should be just state profiles. We don't go down to the community level. So Sam, that's an excellent question. So one of the things our rating engine has, and that's why we are working with the Corps of Engineers, is if a levy has been certified, you get a discount for that. If there's a levy but it may not give enough protection, there will be a discount for that. So that is all built in to the rating engine. Okay, so this is our contact information. You've got Sam's number, you've got Tracy, the NFIP state coordinator there, my contact, Erin's contact, and we will be doing more training, particularly for floodplain managers, community officials, state coordinators, state hazard mitigation officers. We're going to be doing more in-depth training over the next weeks and months coming before we take effect in October, just to get information out so that you all will know a little more information than what we've covered here. I mean, we'll probably be doing at least 2 3 to 4 hour sessions. There's a part 1 and a part 2 to methodology. So, you know, you all be on the lookout for those additional training opportunities for you all. Banks, we will also be setting up for banks, realtors, to also hear what the rating methodology is going to be.
And, you know, one of the things that I didn't put up there as a bullet, I'm just realizing as you went through it, Diana, is one of the reasons, many reasons that they changed this was also to make it a simplified quoting process for agents. So to make it easier for agents to write flood policies. You know, we've had some resistance with agents because our underwriting process is so dramatically different from their homeowners writing, from the private flood insurance market, that they don't really want to write our policy. And so this is going to be much simpler for them. So, you know, hopefully it means we see more agents, you know, willing to talk flood to their clients, because it's not painful to write the darn quote.
Yeah, it's, you know, Erin and I, you know, I did probably 7 or 8 calls today, and they all affected rating. They all affected grandfather. There are mapping changes. You know, how's that going to affect, you know, things. So, you know, I've been on the phone probably since about 11 o'clock this morning, talking to property owners about their flood insurance policies. What can my rate went from $400 to $4,000, and you know, that was because they were misrated, and it's caught up with them.
And we'll continue to help with that stuff, even if we can't see the rating engine. So
Right.
we have
Right.
a direct line to underwriting, so we can have them look into it and explain things to us. So
Right. So with that, we can either open it up for questions. If you want to come off a mute and ask your question, we'll be glad to do that. I know just those 4 slides is a lot of information to intake. And it's going to take a while for all of us to, I'm in my 4th decade with the NFIP, and I've been rating out of a rate manual, since 1976. And it's hard for change, but change is going to happen. And that's what we're doing, is we're changing. We're trying to be more equitable in how we rate flood policies and how we, what coverages are, what our policies say. So it's a big change for all of us.
I actually have a question. I might have missed this or misunderstood. Insurance is not my forte. So like in the past, it was you were required to have flood insurance if you were in a special flood hazard area. Is this still based off of that? I mean, how do you know when you are required to have insurance? Because the reason why I'm asking is, so Milesy is looking at doing a levy to help reduce the size of the special flood hazard area to show that protection.
Right.
And so if it's based off of the distance from the water source, how do you know when someone is required to have insurance?
So the flood maps, the flood insurance rate maps are still going, the lenders are still going to be using those flood insurance rate maps for mandatory purchase. Just, you're still going to be using them for your floodplain management requirements. That's not changed.
Okay.
It's just how we rate the risk.
Okay.
And it's risk-based, not zone-based.
Okay, that makes sense. Okay, thank you.
yeah.
Mm-hmm.
And the lender, the lenders should, in most cases, require when you're in a high-risk flood zone. So that in Montana, that's any A zone.
Mhm.
Very rarely do I see lenders require coverage in a low to moderate risk flood zone. They can, but they don't do it very often.
Yeah, well, again, what is the risk? Do the lenders really know what the risk is? The flood zone could be across the street. All you're getting back is a piece of paper that says it's not in a special flood hazard area. It's in an X zone, but the risk is actually across the street. The other thing that we are not requiring, although it will still be required for floodplain management, it will still be required for letters of map amendment, letters of map revision based on fill. We are not requiring elevation certificates. Now, with that being said, somebody can present an elevation certificate, and we may change the rate based on that elevation certificate, because maybe we're not grasping the first floor height correctly, or maybe they're elevated 3 feet. So that's going to change the risk if they're elevated, and we'll use that elevation certificate, but it's not going to be required as it is.
And we didn't go over this for those of you who aren't familiar with what I mentioned it briefly, but an elevation certificate measures the lowest adjacent grade to the property, the lowest floor of the property, the next highest floor, where the heater is, where all sorts of different things. And we look at that for rating purposes and for the option. If somebody, so let's say the base flood elevation is here and their lowest adjacent grade on the outside of the house is here. Well, if they sit that much higher, they can be removed from the requirement for flood insurance with that elevation certificate. They can send that into FEMA and request a letter of map amendment. That's that LOMA and LOMAR that Diana mentioned. LOMAs are specific to a property. LOMARs generally cover a bigger piece of land, like a developer, like a whole subdivision, or maybe Miles City has done some mitigation work and they know that the risk has gone down and they might submit for a letter of map revision based on their mitigation work. So that elevation certificate for individual homeowners measures how high their property sits. And then also for insurance purposes, let's say base flood elevation is here, lowest adjacent grade is here, but their first living floor is way up here. Well, then for insurance purposes, this is an even better deal. Even if that lowest adjacent grade is down here, just having that next highest floor way up here could help them if they're properly vented and depending on the type of building.
Yeah,
So-
and one of the other things, one of the other mitigation credits that are going to be out there is to elevate the utilities. So if you've got
That's
a hot water heater or a furnace that's in a crawl space and you elevate that up to a higher level, you can get a mitigation credit for that and reduce the cost of flood insurance for that particular property.
And that's already in place now on the rate. So do you know, Diana, is that going to be a better deal than it was in the past?
Yes.
Ah, great.
Well,
Okay.
well, and truthfully, in A zones, we don't take machinery and equipment into consideration. We only do that in V zones.
So coastal zones.
And V zones are our coastal properties.
And we actually do have a V zone in our region, but it's in Salt Lake City, right along the lake shore. So
Yeah. So
but not in
you know,
Montana.
so we're trying to incorporate as much risk base per structure as we can to come up with an equitable rate.
So I have a question.
Yes.
I'm Danette Kramer. I'm insurance agent here in Miles City, and so our town, we were remapped in 2010. Yeah, 2010. And you know, I was really proactive in speaking to all of my customers, whether I had, you know, their home insurance or not. And
Thank you.
knowing with the fact that if they had a mortgage or didn't have, you know, they would be required to have flooding policy in place at some point. I mean, been with the learning curve it's amazing. So, you know, our preferred risk policies, that's where, when our map changed, that's where that number came from, those preferred risk policies.
Right.
And so I guess I'm concerned, and a lot of those people, they're only carrying that policy so that their home is more saleable because they break that chain or, you know.
Continuous coverage, yeah.
Yeah, so we can transfer that policy. Of course, there are a few people who let that policy go when bigger waters came around, and then we had opportunity to pick it up again. So we wrote more policies, but you know, I guess, you know, I'm just concerned or hope that the rate isn't going to be, you know, a huge difference, because a lot of them are carrying just that low policy minimum to keep it in place.
Yeah.
Because, you know, they want to make their home saleable. I mean, otherwise, there's we rated a customer yesterday or today in an A zone, brand new policy, nothing in place before, and it has a basement. Or I shouldn't say, it has a partial basement, but that premium for 130,000 coverage limit was $4,000. I mean, do you see those?
Yeah, as a
maybe
pre-firm
coming
structure,
down?
yeah. So keep in mind, it's not going to go straight to that 4,000. And we're also finding that a lot of times those pre-firms, if you risk rate it, you know, through the new process, that premium is going to go down. But we can't increase any policy more than 18% on an annual basis.
And when you
So
say,
for example, this is where you might benefit is that, remember where we were talking about making the rates more equitable?
because
That
we're in Montana, we won't have,
$130,000 house is going to have a lower rate than that $400,000 house.
Correct.
Does that make sense? Because it costs less money. The replacement cost value is lower to repair it.
well, I
So
would agree.
that should benefit them. And then the other thing is, and Diana mentioned this, but we didn't go over it, you know, are you familiar with that newly mapped process?
Well, I would say that's what most of my policies are.
Yeah.
Newly mapped
So
preferred
that-
risk, that's what they are.
that gradual, glide path to higher rates is not changing. I mean, the rates may be a little different, but that glide path isn't going away. We're not getting rid of that. They may be changing the name of it, so it's not called newly mapped anymore, but that glide path is still there.
Yeah.
So
When
I
you
wouldn't
say
panic over
increase-
that yet.
When you say increase 18%, that's on premium, not fees, correct?
Yes, yes.
Correct. So, I'm going as Erin said, don't panic yet. Let's wait and see. You will have access to the rating engine on or after October 1st. Because the other thing as an insurance agent you have to realize is that the effective date of a policy, October 1 or greater, is going to be rated under the new rating structure. So you would have to write a policy as of September 1st because of the 30-day wait period for a property located in a low to moderate risk flood area. Okay, just keep that important date in mind. So we have to give you access to the rating engine as of August 1-ish, give or take a couple of days. So our goal is to get it out by mid-July, but it may be August 1st. So you'll be able to take one of your policies, key in the information on the new application, which you can look at on the website that we had, the Nfip Transformation. There are some attachments to that will give you the new application.
And the other thing that you could do is ask for a list of your current policyholders, like get a spreadsheet now and look at the map and identify the ones that are closest to the water source. Those are the ones you need to, take a peek at if you have the time. I know that, you've got a busy business to run, but, that distance from the water source, again, we don't have enough information to tell you how dramatic that difference is in rate. But if somebody's right next to an A zone, like literally the next door neighbor is in an A zone and their house just happens to be out, those are the ones that you're going to say, I need to give them some warning or, whatever.
Yeah,
Well,
we
okay, so this is kind of confusing when you say next, because we went from being maybe 1/4 of our city in A zone, and now we're 3/4 of our city is in the A zone. So
And what are the home values? Like, what's an average home price? Do you know?
oh, well, it's higher right now.
Yeah, everybody. Yeah.
Yeah. They're going for easily
again,
150 to 300.
Okay, but again, we're going to look at the lowest adjacent grade, the first floor height, how far from the water source, what kind of water source is it? You're going to have Riverine, okay? So there are like 8 or 9 rating factors that we're going to use to present the rate, okay? So it's not just the distance from the water source. So it's all these other factors that are going to be accumulating or being put out there against from what I understand, against a base rate. And I don't know what that base rate is. I do know that it is we do have, it's going to be different in Florida than it is in Montana, because we've been hearing for years, hey, we're subsidizing the coastal areas, we're subsidizing Florida, okay? And that may be somewhat true. So now we're trying to level the playing field and say, well, the flooding in Montana is different than the flooding in Florida. So we're taking that into account.
Okay, that
So
sounds
let's wait and see how the rates are developed for that individual property.
And back in 2010, I think that was under the PRP extension was the terminology they used. Now it's called newly mapped. Okay.
Right.
So that path will still be there. What that exactly looks like rating wise, we won't know until August.
Yeah, so you'll be getting that newly mapped credit.
Yeah,
Okay.
that will still be there.
Okay.
Even if it's not, they love to change the name, so it may be called something different.
Right?
It may
No,
just
it's still
call it
it's still
premium
newly
discount.
mapped
I
credit.
don't know.
Yeah.
You know,
Oh,
so I know
So it's
for
just
all the
gonna-
rest of you, this is probably way over your head, but it's a great question to ask, and thank you. And you know, our numbers are here, so both of us, you know, when this comes around, or if you have more questions, you know, after
About the process, not
feel free to
about the
reach out.
rates.
Yeah, we'll, you know. Yep. Anybody else? I can't see the chat, so I don't know if anybody else is.
No, I
in the
think
chat.
I think we've gotten all the questions, but feel free, like she did, just, you know, if you've got a question, open up your mic and we'll be glad to.
I just have one more quick thing.
Absolutely.
If someone else wants to butt in, please.
Because it's a change for you too.
It is. I'll get him, and I usually refer him to somebody else. So we have as you know, we have the community rating system, and as a part of that, we have a program for public information. And actually, Danette is one of the main people on there for me. She's very helpful. And with this new stuff coming out, I think it would probably be wise of us to get some, I mean, I'm sure you guys are going to be sending out information, but it would be wise for us as a community to send out information. Would it be okay if, after we kind of did a brochure or something, to run it by you guys to make sure the information we do have is correct?
So actually, we will be notifying every policy holder
Okay,
of the change.
okay,
The first set of letters will go out in July for those that renew in October.
okay.
After October 1. Yeah.
So yours
Yeah.
will only go out to the
I'm sorry.
policyholders, correct?
Sorry, new business as of
New
October.
business. Yeah. Sorry.
But it only goes out to existing policyholders, correct?
It does.
Okay.
So I would say let's hold off on that until midsummer or so, because we may be developing some documents that on the messaging that we want to get out there.
So
Okay.
you don't have to reinvent the wheel either.
Yeah.
And that would be nice. My thing is, we get credit for that as a community. So
Absolutely.
we get CRS credit for that. So I'm trying to think of ways that would be.
Oh, you mean for developing the materials?
Yeah.
So, well, you know, you could even get credit for sending our brochures out. Whatever we're developing, you can get credit for sending that out to all of your residents.
Yeah.
Okay. So it doesn't make any difference who develops it. It's just you can still get CRS credit for your public outreach.
All right. So we will wait until you guys have more information, because I have no knowledge on it. I just want to get the points.
Yeah, that's a good
I
point.
don't blame
because-
you.
Yeah.
I don't blame you.
You gotta get as much points as you can, get you down to a class 7.
I hope so. They say we're there, but I haven't seen anything in writing.
Anybody else?
I think Elizabeth Patton had a question.
Yeah, and I don't know what happened to my Zoom, but I'm
Go ahead,
back.
Elizabeth.
So
The same thing that happened to the screen sharing.
apparently, but so from what I'm gathering, that notice telling me that my property is in a special flood hazard area that's kind of null and void at this point.
If it comes from
Because
the,
there's
that's different. Okay.
if it comes from,
So if you're in a special flood hazard area, you have a federal mortgage, you don't have flood insurance, you're going to get that letter from that lender that says you've got to have flood insurance.
Yeah, you can't ignore it.
That's
I have
still
flood
out there.
insurance. I have
Oh,
flood
okay.
insurance.
Okay.
This is
Okay.
like an update or something coming from, it's got FEMA and NFIP stuff all over it. But I mean, I carry flood insurance and my policy goes, I pay more every single year. So I'm hopeful that this new rating will not cause more of an increase, but 18% every year is a big deal.
Well, that's up to
Yep.
18%. Keep in mind,
yeah,
up to 18%.
that's a big deal.
It is. It is.
On a policy that 3 years ago cost me just over $400 a year. The next year was $570. The next year was $746, and next year is going to be $825 for me. So that
You have a basement.
$320
Yeah.
that you had on your first slide sounded fantastic.
Yeah.
I don't
Well-
live in a big house. I have a tiny little house here, and I hope that this new rating system is actually, I mean, you ladies are saying it sounds like it's going to be fabulous for Miles City. If I see another 18% increase on top of what I'm already seeing, that is not fantastic or fabulous for Miles
Samantha,
City.
do you know where Elizabeth lives?
I-
Has she gotten an elevation certificate or anything?
I'd have to check into that some more.
Yeah, why don't you and Samantha chat a little bit, and then we can talk offline after the meeting, because we're not supposed to do address specific stuff on these Zoom meetings, but
Yes, 'cause
there
it's
may
recorded.
be, do you have a basement, Elizabeth?
Yeah,
Yeah, you do.
I could tell that from the premium. Yeah.
We have a lot of basements in Miles City, a lot. We like.
I mean,
There's
the
a lot
house
of
was built
basements
in
west of the
1910.
Mississippi. Yeah.
And it's
that-
not a
the-
walkout basement. It's all below ground on all four sides.
Correct. On a little tiny house that was built in 1910.
Yeah,
Trying to
so
get
so-
some money, Elizabeth.
What, Sam?
I'm trying to get some money to build a levee, Elizabeth.
I know, and hopefully that will make a difference.
That
I
should help
just,
some, but until we get to that point.
Yeah.
Right.
We can't really tell you anything until we get to that August 1st date and
Okay.
get that engine up. And then your agent will have to tell you what your premium is going to be.
yeah.
it'd be interesting.
I don't know.
It'd be interesting to look and see if any of the neighbors have gotten a letter of map amendment. Do you have
They
many in your,
haven't.
you
They
know that?
haven't. I know they haven't. And the closest one to me is enough blocks away that I don't know that it would be worth it for me to pay for the survey at this point.
You know, in Montana, there's actually some surveyors that for $300, they'll come out and tell you whether it's worth it to finish the darn thing. I wish more states would do that.
We have that here. Ours actually isn't, compared to some areas, it isn't that much. But Elizabeth, I keep track of all of our lomas in that. I do need to update my map. And so after I do that, I can let you know
Yeah.
anyone that might be close to you in that. Because we do have a lot of lomas in Miles City.
Yeah.
I think I'm over 300.
And if you need to update your map, Sam, that's awesome. I looked at it one day in your office and there was nothing close enough to me that made me feel like I should go do that right now.
I've gotten some more lomas in, so I just haven't had time to update it yet, but I will get on it and I'll let you know.
No, that would be interesting. And I guess basically, I mean, I know, Diana and Aaron, that you don't have any control over what where my house sits and, you know, what you get to kind of disseminate this information, but it's not, you're not the one.
You mean
they're
we
going-
get to be the bearer of bad news?
Well, yeah, okay, yep. But I
Don't
guess.
shoot the messenger.
I know. I don't know who else you do this presentation for, but it's really, really disheartening to be sitting in a very small house and then hear that some flood policies are only $325 a year and mine is not. And I'm far away from the river and I'm not in an expensive house.
Yeah,
So-
keep in mind that $325 premium is for 20,000 building and what, 6,000 in contents. So it's kind of a misnomer, but you know, if you know, you
So
can
add that to your slide. I mean, really, because otherwise you sit there and look at it and you're like, what is wrong with what's wrong with this picture? Okay, I do have more than whatever number you just said in content, for sure. So
absolutely.
And the higher
although
deductible helps a little
not in
bit.
my basement, which
I
so it won't
have
be
that in
covered
my
in a flood
shoes
anyway.
alone. So
But
Yeah,
Anyway.
shopaholic Diana here. She's hell
Yeah.
to go on a business trip with. That's all I'll say.
so Elizabeth, let me ask you a question here. Do you
Yeah.
have machinery and equipment in your basement?
my furnace and my hot water heater are both
Okay.
in the basement.
So can you move it to the attic?
Nope.
Okay.
Not even a chance. I don't have, like, we have a hip roof,
No room.
not a peak roof.
I have the same issue. I'm exactly the same way. I have a hip
So-
roof. My heater and air condenser is in my basement.
And my air conditioning unit is outside, but yeah, the hot water heater and the furnace are in the basement.
Yeah,
So-
even if you can elevate your air conditioner outside, you can get a credit for that.
And the other thing that I will say, Elizabeth, is, when the time comes, look at the private market. Sometimes the private market is like, $1,000 a year or $980 a year, and then it doesn't change dramatically like ours does. So,
National
the
General.
thing is, when you do that, you can't hold on to our policy in most cases. And so you'll lose the option to go back to a newly mapped unless your home is newer, which yours isn't.
No.
Or it's been
So-
substantially improved, which means it's been improved by more than 50% since it was built. So you get a new date, which we just had one of those cases too.
Oh, so if
So-
it has been substantially improved, you can go by the date of the improvement?
Yes.
If it's
and the flood zone
50% or
you were in.
more, it becomes new construction. Now, there are some drawbacks to that too. If you may have to elevate your whole house. That may be a good thing in a number of ways, but do you want to do that?
I'm with you, Elizabeth. The ironic laugh, I'm with you. That's not an easy process, but
Just
I'll
lift
tell
my
you
whole
that-
house up. Fantastic.
Yeah.
But I know there were, so I think I would have to find out for sure what year it was. It was after 2000 though. There was a fire in this house before we owned it. So the entire thing, like, there's no more plaster and lath. It's all sheetrock. The
Sheetrock.
wiring was updated, new windows, new roof, all that kind of stuff.
Yeah.
So it might be worth is it maybe worth looking at the date that all of that was done and using that in
Not at,
conjunction with this?
not at this time can we tell you an answer to that question. So
Okay.
You mean until
We-
the new rates come out?
until the new engine is out and you check,
Oh,
does it make a difference? Okay.
so that would be with this new rating system. Okay. And some of the reason I'm asking as many questions as I am is because I sit on city council and I'm on more than one flood committee with Samantha. And so I have, people in town, not only my neighbors in my ward, but in other wards will ask questions,
Sure.
or how come you can do that on that building and not this one? Well, it's
Yeah.
here in Miles City and not over here, or different things like that. So part of the
Yeah.
reason,
Right.
using my house as an example, but that I'm asking as many questions as I am is because of that,
You have people, other people you have to answer to.
that public position that I hold.
And Elizabeth, if you get those kinds of questions, please feel free to call either Erin or myself, and we'll be glad to help you
Yeah.
with your pros.
That's what we're here for. This is what they pay us for, is to get,
Yeah.
I mean, I'll give you an example, Elizabeth. I helped somebody on the East Coast. My team answers online questions for FEMA headquarters, and I saved a guy $30,000. And he got $30,000 back from FEMA. So, because he was misrated.
I think Elizabeth froze on us.
Yep, I think so too.
Yeah, I
But,
think she did
I
too.
will
At
let
least
her
she
know
froze
too.
not with a funny face,
Yeah. I will let her know though, because I've had people contact me and I know a couple times I've sent you guys a question.
Yeah, absolutely.
Yeah.
But we do have pretty good insurance agents in town that will look into stuff. I'm very fortunate there.
Yeah.
So
well,
So Ms. Kramer, did you have another question?
Too.
Oh, no, I
Okay.
don't.
Okay.
All right. Are we all set then?
Any other questions from anybody?
We're about 40 minutes over our time limit here.
I know.
But that's good. I'm glad we had this.
Usually happens with questions.
I'm very happy with the people that came on and the amount of people chatting and that stuff, because I didn't have that before. So I really appreciate the people that have come on and have asked questions and participated in that stuff. While there may just be a few of them, I do appreciate that because I didn't have that last night. You guys were on with our NWS, the National Weather Service, and we didn't have
Yeah.
it then. So I
Yeah.
do appreciate people coming on and asking questions and getting
Yeah.
informed. I think it's very
Well,
important.
Thank you. Glad to do it.
Good job pulling this together. I always wish we had bigger crowds, but you know, when
Me too.
when everybody thinks it's a low risk year, they're not going to be as interested.
Until I hit their pocketbook really hard, yeah, no one really worries too much.
Yeah, yeah.
But
Yeah.
thank you guys for taking the time out of your evening to present for us today. And
Thank you.
if anyone has any questions, like I said, please feel free to contact them, myself, or Tracy Sears. And if we don't know the answer, we will steer you in the correct direction. Thank you, everyone.
All right.
Happy
Bye.
summer, everyone. And my dog says bye. She says, do I get dinner now?
Bye.
Take care.
Bye.
You little troublemaker. You little trouble.